It is being very stubborn right now. Who is being stubborn? Inflation is. Why is inflation a critical topic to talk about on a podcast about real estate and mortgages? Well, the answer is straightforward. Inflation impacts mortgage rates. As a primer, inflation has a direct impact on mortgage rates. If you understand how inflation impacts mortgage rates, you can make an informed decision in the real estate market. This is a mini podcast episode 186 of the Martini Mortgage Podcast, which I'm calling How Inflation Impacts Mortgage Rates. Now, before I start mixing up this cocktail, I have to make those legal folks happy. So, I am Kevin Martini, and I am a certified mortgage advisor and producing branch manager, NMLS 143962. With the Martini Mortgage Group at Gold Star Mortgage Financial Corporation, NMLS 3446, Equal Housing Lender. The primary purpose of this podcast series is to inform, entertain, and educate. The information, opinions, and recommendations presented in this podcast series does not constitute legal or other professional advice, opinions, or endorsements of any kind. First, let me make sure we are all on the same page on inflation. Inflation is the increase in the general price level of goods and services in an economy over a specific time. Inflation erodes everyone's purchasing power and impacts many people's investment decisions. When inflation is high, money value decreases, making everything more expensive, especially those mortgage rates. Conversely, when inflation is low, it means that the value of money is increasing. This makes everything less expensive, and mortgage rates are lower. As a certified mortgage advisor, I must highlight that the relationship between inflation and mortgage rates is sometimes very complicated. There are unique times when inflation can rise without causing mortgage rates to go up, and there are times when inflation can fall without causing mortgage rates to go down. However, on the aggregate, high inflation leads to higher interest rates, making borrowing money more expensive. This can make it more challenging to qualify for a mortgage and also can lead to higher mortgage payments. And lower inflation leads to lower interest rates, which makes it less expensive to borrow money. This can make it easier to qualify for a mortgage, and it can also lead to lower mortgage payments. In addition to inflation, other factors can affect mortgage rates, such as the Federal Reserve's monetary policy, the state of the economy, the investors' demand for mortgage-backed securities. However, inflation is one of the most important factors that impacts mortgage rates, especially since mortgage rates live in the bond market. Now, to echo this sentiment, one needs to know that mortgage rates are not directly impacted by the Federal Reserve. Let me repeat that for the people in the back. The actions of the Fed have no direct relationship to mortgage rates because mortgage rates live in the bond market. Now, bonds are a little counterintuitive because when bond prices drop, you would think mortgage rates would fall. But no. That's not the case. When the price of a bond drops, to make things more attractive to an investor, yield increases to make it more appealing at the lower price. When yield increases on a mortgage bond, so does mortgage rates. I know that was a lot, but know it's important. Now let me share the good news. The Federal Reserve is working very hard to get inflation under control. Now, the sad news, in my opinion, they were very late to the party, But the good news is they are here now and they're working very hard. I'm pleased to share at the time of this recording of episode 186 of the Martini Mortgage Podcast, we have seen 12 straight months, a dozen months where inflation has moderated. The CPI was at its peak in June 2022, where the print was 8.9%, and the most recent print was June 2023, and it was 3.1. Now, the Fed has a target to get to, and that is 2%. Let me bring this important point home. Mortgage rates follow behind inflation. In other words, if inflation drops on the first Monday of the month, then mortgage rates will likely fall on the second Monday of the following month. The drop in home loan rates is not instant. It lags. Does that make sense? Okay, why I'm sharing this? The answer is super simple. Sure, mortgage rates are higher today than we have seen in recent past. And I believe the current home loan rate environment represents a unique competitive advantage for home buyers. Yes, I said it. I said higher mortgage rates provide an edge for home buyers. Here is the reality. There is a real housing inventory shortage in the marketplace. And this inventory issue, at best, will take decades to resolve if it's ever going to be resolved. When mortgage rates shift lower, mortgage buyers will enter the market, since not everyone can afford a home to buy right now at the current interest rate level. So there will be more buyers trying to buy those fewer homes, which will cause home prices to go up, and real estate could reach even higher highs. When you have a mortgage, you can always refinance. I share this because by buying a home today in the current environment, you can lock in the price of your home. And when the home loan rates migrate lower, you can refinance your mortgage to a lower rate. And that will occur when inflation gets under control. Again, inflation getting under control is a when, not an if. This is a strategy that I call commit to the house and flirt with the rate. Not everyone can do this. However, if homeownership's on your radar right now, in the moment right now is the opportunity to explore your options. Maybe the commit to a house and flirt with the rate is the proper strategy for you and your family. Or maybe you don't qualify to do that, and that's okay. The key point that I want to make here in closing is you owe it to your future self to explore your options that are available. If the answer is yes, fantastic. If the answer is no, fantastic. Because together we can develop a plan and a timeline to make it happen. My name is Kevin Martini, and I'm a certified mortgage advisor with the Martini Mortgage Group. I help families create generational wealth with the proper mortgage strategy to secure real estate. Let's connect to explore your options. Now listen, I might be located in Raleigh, North Carolina. However, I help families all over the U.S. If you're open-minded and want to have a confidential, no-pressure conversation, I invite you to call me personally. My number is 919-238-4934. Thank you for tuning in to this episode of the Martini Mortgage Podcast. Thank you in advance for sharing this episode with someone you care about that might benefit from it. Looking forward to talk to you, and until then, wishing you peace and blessing.